Good afternoon and good morning. Thank you for joining us. I know that we have a lot of attendees here in sort of my area, Tampa Bay area, and in the Eastern time zone, but I know we're also having attendees nationwide. So depending on where you're listening from, thank you so much for joining us. My name is Larissa Green. I'm with Advanta IRA, and we're going to be talking today about using small amounts of money and putting it into big deals. And Bill Cook is going to join us momentarily. But to get started, I just wanted to talk a little bit about Advanta IRA and what we do and how IRAs can make these investments as well. So it is important that when you're using an IRA, you understand the rules and how those strategies can work. But today, we're really not going to focus too much on that because I want to give Bill plenty of time to go over the presentation that he has put together for us. And like I said, he'll join us in just a minute. So to get us started, I wanted to tell you a little bit about myself and about the company, and then we'll talk about self-directed IRAs. I won't take up too much time with that, but again, my name is Larissa Green. I've been with Advanta since 2011, and I do business development and education, and I've been doing that for probably about, I would say about 8 years now. So for those of you that know me, you know I do a lot of networking for the company. I'm out and about at all the classes, and I really enjoy my job and having the opportunity to meet so many of you guys out there at classes and networking events. If you guys have any questions on anything that we go over today, feel free to reach out to me, and I know that Bill will also share his contact information with you. But here's my contact information, and I'll show it again at the end of the presentation. So we talk a lot about the rules and strategies for self-directed retirement accounts, but something that we don't do is give investment, legal, or tax advice. So that's very important for you guys because remember, as a self-directed IRA holder, it is going to be up to you to find those investments that you feel comfortable with and do your own due diligence. And if you have a question and you're not sure who maybe can help you with that question, feel free to reach out to me. I might be able to refer you to some professionals that have been helping our clients over the years with maybe something like understanding whether this is a good investment or how to structure a note for an investment, things of that nature. So that's something that we don't do. But we do talk a lot about rules and how self-directed IRAs can work in different strategies, and we have classes all the time. And I'll talk about that in just a few minutes as well. I want to mention that I do keep everybody muted on the webinar, and the purpose for that is just very simply so that we have a very smooth recording for those that want to review it later on. But you are welcome to ask questions. So if you have questions, go ahead and get them typed into the chat box, and I will periodically be checking that and asking and answering those questions, but also asking them of Bill. So when he's presenting, if you do have questions for Bill, again, feel free to type them into the chat box. So Advanta IRA is a self-directed IRA administrator, and we've been doing this job for nearly 20 years. We have 2 offices. We are in the Tampa Bay area of Florida, and then we are also in Atlanta, Georgia. But we handle actually all of our transactions and things of that nature in Tampa Bay. Our Georgia office does a lot of education and networking for us in that area. But we can actually work with people nationwide. So we have clients nationwide and even worldwide. You just have to have a US-based retirement account to self-direct it. And so we have clients that are outside of the US taking advantage of that as well. And something that we do a little bit different than our competitors is that everybody receives an account manager, so somebody that is with them for the life of the account. And we see that as a huge benefit to our account managers and also to our clients, because when they're putting deals together and working together on a regular basis, it helps them to understand what one we can help them with, and also for our account managers, it helps them know what their client is working on a regular basis. And so we find that over the years, that's been a huge benefit and something we do a little bit different than our competitors. So what is a self-directed IRA? In case you guys are joining and really haven't attended any of our classes, just very quickly, a self-directed IRA is very specifically, in our definition, an account that holds something outside of the market, so private investments. I know a lot of brokerage firms will offer a self-directed retirement account, and what they're talking about really is the opportunity to choose stocks, bonds, and mutual funds, but all things traded within a self-directed, or excuse me, within the market. And so If you're looking to invest in things outside of the market, brokerage firms typically will not hold those investments, and that's really where we come into play. And so what types of assets are we seeing? Well, here's a very, very short list. So the IRS really hasn't given us a list of things you can invest in. Instead, what they've done is given us a list of things you can't invest in, and that list is very short. Life insurance and collectibles, those are the only two investments you can't make with a self-directed IRA. So outside of that, the sky is just about the limit. And why is that important to you guys? Well, over the years, I've learned that we have very entrepreneurial, very creative clients. And so if you do something that is maybe a little bit unique for your personal business, it is very possible that that is a strategy you might be able to carry over to your IRA as well. The IRS also does prohibit you from dealing with certain persons, and we're not going to talk about that today, but we do teach classes on that as well. So if you have questions on that, I would encourage you to join us for other classes. But just to really sort of introduce it very quickly, basically you want to make sure that you're doing deals with third parties, people unrelated to you, and making investments for investment purposes. So that's very important. And again, back to sort of this short list that I have here, something that we see on a very regular basis is going to be a real estate type of investment. So that could be a buy and hold, something like a single family property. It could be a mobile home, a condo, a duplex. It can be buying into commercial properties or multifamily. So there's a lot of different strategies we see for real estate. It is actually the #1 asset class that we see at Advanta IRA, but it only makes up for about 30% of the investments we hold. So that sort of gives you an idea that although it is the largest asset class, there are so many other things we see clients doing with their self-directed IRAs. And we hold about 1.2 or 1.3 billion in assets under management. And so a large portion of that is real estate. We also see a lot of mortgages and notes. So private lending, if you want to be the lender or be the bank in this scenario and lend your money to, maybe another investor who wants to rehab a property, or an investor buying and holding rental properties, that's completely up to you. And the great thing about being the bank with a self-directed retirement account is that you get to choose the return or the rate at which your IRA is going to grow. So if you say, okay, I'm going to lend my money and I want 10% and 2 points, well, then you know that 10% and 2 points is coming back to your IRA. And it's almost like having a CD with a bank, but maybe better collateral and maybe longer term. So it's completely up to you. And we have a lot of clients that just do private lending in their self-directed retirement account. And of course, the beauty of that, again, is just that if you want to invest in real estate, but you don't want to have to worry about tenants, termites, and toilets, then maybe lending money on real estate might be the better way for you to go. The next thing I have up here is private placements. And again, just very simply brokerage accounts. They're unwilling to sort of hold these types of private investments. They consider them hard to value or resell. And so they just don't want to hold them. And there was a time that maybe they would hold these, but really because of the changes in the fiduciary laws a few years ago, they're less likely to hold these. And as a matter of fact, we received a lot of accounts from some local brokerage firms that really just didn't want to hold what they had held previously. So that's a big one as well. And then, not just with private placements, but more specifically private stocks. So we have clients invested in restaurants and breweries, and even local bank stock that they cannot hold with their brokerage account. I also have up here precious metals. And I like to use that one because, you'll see a lot of interest in that from time to time. And a self-directed IRA can actually hold precious metals. And we're not talking about stock in precious metals here, but actually the tangible gold and silver bars and coins. And so it's very easy to do. You find a dealer, you make the purchase, and you have a third-party depository hold those metals for you. We also see things like foreign currency exchange and even cryptocurrency, futures trading, and then the list really goes on and on. But the point of giving you this list is really just for you to sort of be thinking about what types of strategies you might want to use for your self-directed account. And when Bill talks about the different deals that he has done, maybe gives you an idea of how that works in a self-directed retirement account. Why haven't you heard of a self-directed account? Just very simply, again, brokerage firms don't want to hold private investments and they really sort of want to focus on the market. And so we do the exact opposite. We're just filling the gap in the industry to hold those private investments. It's not an all or nothing strategy, so you can maintain your brokerage account and also self-direct your IRA. You can have as many IRA accounts as you would like. It's actually the contribution that's going to be limited across the board per individual. So if I have a Roth IRA with Advanta and I have a Roth IRA with my brokerage firm, I can maintain both. But when I go to make my Roth contribution, I have to either make the contribution to one or the other or spread it among the two accounts. So that's sort of how that works. And actually, just a little known fact is that less than 4%, and it says IRAs here, but really that's like all retirement accounts. So that's pensions and 401ks, any type of old employer plan or current employer plan. They're less than 4% are truly self-directed. So using the definition that I mentioned earlier with private investments. Just giving you a quick idea of the different types of self-directed plans, and I'm not really sure why this is, but a lot of times I meet people that tell me, well, I can't self-direct my account because it's not a Roth IRA, and I'm not willing to do the conversion and take the tax hit to make it a Roth. And I'm not really sure where that comes from, but the truth is, if it ends in IRA, it can be self-directed. So I have up here traditional and, of course, Roth. And these are going to be, of course, the two most common types of accounts that we see. A traditional IRA is great because you can move a pre-tax employer plan to it very seamlessly. You don't pay taxes or penalties to do so. And of course, you get deductions for making contributions to this account. Roth IRA, I think a lot of people know it as the tax-free account. So if you want to put money in, you don't need a deduction and you want it to grow tax-free, the Roth is a great account for that. And then I have employer-based IRAs, a simple and a SEP IRA. Those are both employer-based plans, but of course, as sole proprietors or independent business owners, you can have these accounts as well. They're great plans for small businesses, and they allow you to put a larger contribution in on an annual basis. Another great employer-based plan is a solo 401k, and this plan does allow you to have yourself, your spouse, and any business partners as employees. You utilize this plan, but once you have regular employees, that's where a solo 401k is no longer useful to you. But that doesn't mean if you start out as a small business, you couldn't have a solo 401k and add employees later on. So if you have questions about that, let me know. I also have up here former employers plans, and the reason that I sort of um, underline former is when you're currently employed, when you're currently participating in a plan, it's very unlikely or very unusual that that plan and that employer will allow you to move a portion of those funds. So just keeping in mind that it's not unheard of. So if you are currently participating in a plan and you'd like to move a portion of those funds out to self-direct, you can always check, find out, and confirm whether or not that would be allowed. We have seen it from time to time, but very typically when you're currently contributing and currently employed, they don't let you do that. But any former employer plan, you certainly have the opportunity to roll those funds into an IRA or maybe even a solo 401k and therefore self-direct. I also have on the board health savings accounts and education savings accounts. And it's a very little known fact that these accounts, the rules for self-directing them are going to be exactly the same as self-directed IRAs. And so we can help you with these as well. We definitely see an uptick in health savings accounts right now during open enrollment. So if you have a high deductible healthcare plan that allows you to make contributions to a health savings account, that's very important, has to allow those contributions, then you can self-direct it. And so you can make your contribution with us, and then you can get out there and grow that health savings account. And same with an education savings account. I don't see a ton of education savings accounts, and I think maybe that's just very simply because the contribution limits are going to be a little bit lower than people hope. It's $2,000 a year. It hasn't been changed in quite a long time. It can still be a great account to utilize. So if you have questions on that, let me know. Why do people choose to self-direct their account? Well, very simply, it's a new source of capital. Many people aren't aware that they can self-direct their account. And so finding out and going, okay, well, I have the opportunity to use the capital in my IRA. And usually an IRA tends to be something that is very liquid for people. So if you're making an investment and you say, well, I have to sort of raise the capital out of my personal investments for this new asset or for this new investment, you'll find that very typically it's very easy to go to your IRA as a source for that capital. So that's the first reason. The second one is going to be stock market fatigue. A lot of people are tired of the roller coaster ride of the stock market. I know, especially this year, but also in previous years too. And of course, it's cyclical and we see changes constantly. And so, again, it's not an all or nothing strategy. You can still leave money in the market, but if you want to move some of that hard earned money over to a tangible asset like real estate, you certainly could do that. And then, of course, the tax benefit. Paying Uncle Sam isn't something we want to do all the time. And so, if you're looking for a way to have earnings go back tax deferred or tax free, your retirement account will do that. And of course, a Roth IRA is a huge benefit because as long as you're age 59 and a half and you've had the account for 5 years, it is now growing completely tax free so that at distribution, you can take that money out tax free with no penalty. So, that's a great way to defer or have tax-free earnings on investments. So before I bring Bill on, I'm going to just give you just a very quick overview of what investing with an IRA looks like. And I just want you guys to keep this stuff in mind while Bill is talking about the deals that he has done with smaller amounts of money, because a lot of times people say to me, well, I made one large investment, but now I have some money sitting in that account. Either it was, income on that investment, somebody got an interest payment for a loan, for example, or a dividend from some investment that they're holding, but now that money is just going to sit. So what can I do with that money? So Bill's going to talk about that in just a second. But this is how those investments work within an IRA account. So the IRA administrator, in this case, Advanta IRA, is the legal signer for your retirement account. So that's important when you guys are going out there and making offers and putting deals together for your retirement account. Keep in mind that it is not considered a legal transaction until the IRA administrator signs it. So we do have you guys sign all the documents, read and approved, so that we know you've reviewed and agreed to the investment, but ultimately we're going to sign it. And so if you go to contract, for example, on a rental property over the weekend, we still have to sign it come Monday to make it a legal contract. And of course, the exception here is a 401k. With a solo 401k as trustee, you are legal signer. If you have checkbook control, then you don't need to come to Advanta IRA for anything. If you have the full service model, then you'll just want to check in before making any investments finalized so that your account manager can help you with the paperwork. All investment documents will be in the name of the IRA. A lot of times people will turn in investment documents, whether it might be, the note and mortgage, for example, the limited partnership documents, real estate contract and closing documents, and they might have their personal information in a couple of different places. And so your account manager reviews it and says, nope, this is where we need to put Advanta IRA. It's going to be our address. So for example, the lender would be Advanta IRA Services, LLC, for benefit of John Smith IRA number 1234, for example. So that's very important because that's going to show the IRS that this investment is tax deferred or tax free being made with an IRA. I think most of the time we don't think about this because we're investing in stock, which is the normal investment or the most common investment you'll see in a retirement account. And that's all kind of being done for you behind the scenes. So you just sort of click a button, buy your stock, and you don't even think about how it might be titled when it's being purchased. And so it is very important with a self-directed investment that we make sure everything is titled properly in the name of the IRA. The IRA will receive the income and pay expenses directly. And again, that's very important. And you want to make sure that you're doing that properly, whether or not you have checkbook control. So if you guys have any questions on that, let me know. And I can always send you one of our recorded webinars that we've done in the past on the rules and how they work, especially when it comes to having checkbook control, whether it's direct checkbook control with a solo 401k or you're using an entity like a trust or an LLC. And then being aware of prohibited transactions. So, I touched on that very briefly. And again, if you guys are interested in learning more, just let me know and I can definitely send you links for pre-recorded webinars. So with that, I'm going to introduce Bill Cook. He's on with us now. And for those of you that know Bill, you know that Bill is on a 2.5 to 3 month trek across the United States on his bicycle. So he is joining us from somewhere maybe in Alabama today. How are you doing, Bill?
I'm doing well, and I want to double check to make sure you can hear me.
Yes. Yep. You're coming through loud and clear.
Well, a couple things. First of all, Larissa will tell you is when I tried to get online before I was at a kid's playground, and I was down to one bar and it just wasn't working. So we'll talk about solution driven in a second. But anyway, I'm now in a partially constructed metal building. And I tell you that because I'm right next to the Naval Air Station in Pensacola. And I tell you that because the Blue Angels are practicing, and evidently I'm right over the flight path. So when you hear the afterburners roar in this microphone, understand I'm having a grand time because most of the roof is missing on this building, along with the wall that shows where the Blue Angels go down the runway. I'm sitting here watching an air show by the Blue Angels as I do this.
That's that's awesome, Bill. Yeah, we were having some trouble getting him on a little bit ago, so he said just start the webinar and I'll join. So as soon as I saw him pop on, I felt relief because I thought I don't think I can explain his deals as well as he can, and that's not what people are joining for anyway. So so
And
glad.
that's what I want to talk about is whenever, when as real estate investors, things happen, things go wrong. And there's two ways to handle this. One is you are going to be problem driven. The other is solution driven. And I work with a lot of people that are having a problem with their deal they're doing or deal they're trying to get, or something's going haywire, or they're using a self-directed account and it's not working right, and they stay in the circle of the problem. Around and around they go, and really it's almost like no matter what I say to them, no matter how we talk about it, and I'm trying to get to the solution, they can't come off the problem. So always remember and tell yourself this over and over. When something's going wrong, say, okay, what is the solution? Focus on the solution and move toward the solution to the problem. Don't stay on the problem. So when I was at a kid's playground, and God knows what they thought of me, because here's this strange man on a bike with saddlebags all over his bike, dressed strange, smells really bad, and he's at a kid's playground. And all the moms are like all moved to one side of the playground to get away from me. But anyway, I moved from there and pedaled about 2 miles down the road, and here we are. So are we ready to go, Larissa?
We are ready, Bill, and I have your introduction slide up, and I don't know, can you see the slides?
No, as far as I have the slides also in front of me. So
Okay,
you tell me what you tell me what. So
slide we're on.
you're clicking through right now, right? You have my contact information.
I do, yep.
Okay, so I'm just going to let you run the slide projector, and I'll just do this. So first off, y'all should know that I'm not a coach nor a mentor when it comes to real estate investing. I am a teacher. And also, the best way to reach me is my phone number. So I don't upsell, but when you have a question or a problem and you're like, how do I solve this? Feel free to give me a phone call. My phone number is 770-815-8727. I helped 3 people last night that had different deals going on. And I got done biking for the day. And like Larissa told you, I'm biking across the country. So I started in San Augustine, Florida, which is where the Atlantic is. And I'll follow I-10 basically across the country, not I-10 itself, but right around it. And I'll end up, when I hit the Pacific, I'll be out of road and the journey will be done. And you can follow the journey. I've got my website there, Bill and Kim Cook, and I'll start putting a weekly update on what happened. And I'm just kind of documenting the trip and really tying it into real estate investing and deal structuring and how that relates to relates to biking across the country. And by that, I mean, if you want to be a successful real estate investor, you've got to go out and find people to help and problems to solve, and you've got to make written offers. And for me to bike across the country, I just got to face west every day and pedal. So in both cases, the tasks are big, but the job is very simple. Not easy, but very simple. Okay, Larissa, next slide.
Okay.
So what I want to do is talk about 3 different deals I've done with very small amounts of money, because a lot of times I talk to investors who have put maybe less than $30,000 into a self-direct IRA, but they can't go buy a $150,000, $300,000 house with it, and they're like, I don't know what to do with this thing, so they just kind of get stuck and don't do anything with it. And I want people to know that you can use as little as $100 and make a really good deal happen. I'm going to show you examples of 3 of those. So the first one is Poplar Springs, and this is a mobile home in a park in Adairsville, Georgia. Hang on, that's the afterburner. Anyway, it's a mobile home. It's the very first mobile home I ever did, and we did it as a Lonnie deal, meaning that I bought the home for cash, and then I sold it on time. So I'm really in the note business. I'm not in the home business when I do a Lonnie, and it's named after Lonnie Scruggs. But I'm in the home business, not in the note business, not in the home business. So I want to talk about how this deal was done. And though I had done a bunch of single families by this time, I had not done any mobile home deals. And so I wanted the experience of someone who had done it before. And I recommend you do the same thing. When you're doing your first subject to deal or your first master lease or first whatever, give up part of the deal, as you'll see in this example, because what you gain is knowledge. What you gain is experience and wisdom. And that is worth its weight in gold because you can use that once you understand it over and over and over again. So again, this is the very first Lonnie deal Kim and I ever did, but we did a total of, I think it was like 45. And we ended up buying a mobile home park. And that can all generate its beginnings back to this one deal. So next slide. So the way it was found was Kim and I in 2008, because of the Great Recession was happening, we knew affordable housing was in demand because we were getting all these phone calls. Do you have anything at $400 per month? And our single family houses, the cheapest one rented for $750. And with all the phone calls we were getting, we wanted to service that market. And so we decided to do Lonnie deals. And again, a Lonnie deal is when you buy a mobile home in a park and then you sell it on time. Now understand, I didn't have any money in this deal, and I didn't have any knowledge of how to do this deal. So pay close attention to watch how I gained the knowledge and how I got the money to do this deal. So anyway, I told all my friends what I wanted to do, and I got a friend of mine named Kermit Hopper, and he told me someone wanted to move into one of his lease option houses, and they had a mobile home, this home in Poplar Springs, and they wanted out of the mobile home, but people who were making them offers of $1,000 or $2,000, nowhere close to what it is they wanted, which was 11,400. And they didn't want to lose the house, but they wanted to get their price, and so I went over and talked to them. Okay. So I want you to understand where Lonnie deals came from. The guy in the tan coat, that's Lonnie Scruggs. And he came up with this back in the 70s, again, buying mobile homes for cash and then selling them on time. And usually you're doing it in somebody else's mobile home park. And the guy next to him is Dyches Boddiford. And Dyches has been one of my teachers since about 1997. And he had done a ton of Lonnie deals. So when it came time to do this deal, I called up Dyches and asked for his help. I said, I'll give you half of the deal if you'll look over my shoulder and you make sure I don't make any mistakes. So he agreed to that. So that's where the knowledge and experience came from, is Dyches was looking over my shoulder. Okay, next slide. Now, what you're looking at now is something called a T-bar. And I cannot begin to tell you how important a T-bar is. And almost nobody uses it. No investors use it. And I'm always dumbfounded because this is the most important document I use at a seller's kitchen table because it shows the seller why. It's not, and oftentimes it's not about the how much, it's about the why. And I want to make sure they understand what the problem is. And then if they accept my offer, where they, here's where they start, current position, and here's where they could be if they accept my offer. That's their potential. Hang on. You gotta love F-18s on Afterburner. I mean, there is nothing better than this. I'm enjoying the hell out of this, guys. Anyway, so the potential position is all they have to do is accept my offer. And so this is the T-bar that I did with with um, with Kermit or with this couple. And with it, I just listed down when I was talking to him what problems he was having. So he wanted Kermit's lease option house. He needed to have his trailer sold fast. He was getting lowball offers, but what he didn't realize was he wasn't getting lowball offers, but someone who wants to buy a trailer in a trailer park, they want to live there. Normally they don't have very much money. So they were doing the best they could. They just didn't have the funds. And when I asked them, okay, what do you need the money for? And again, his asking price was $11,400. He said, well, I need 3,000 of it to give to Kermit as the option fee. So though he wanted to sell his home for 11,400, what he needed was $3,000 cash. And then he said, if I can have 10 days to get moved, that would be great. So that's the left-hand side. That's his current position. I'm sitting at his kitchen table. I get this information out. And then as I'm talking to him, I'm making arrows to the right-hand side. And I'm thinking to myself, with whatever structure I come up with, if he says yes, because I didn't quite know the structure yet, but here's what can happen to him. He can get Kermit's single-family house, the house that he wants to live in, and I can buy his home within 3 days. So I didn't have the know-how and I didn't have the money to do this deal. I knew I could get it closed in 3 days. And I told him that I would be willing to pay his asking price, but in this is a teeter-totter offer, which is if he wants 11,400, so he's naming the price, okay, I get to name terms. So if he would have said I want all cash, that means he's naming terms, then I get to name the price. But there's 2 seats in a teeter-totter, and I just want one of the seats, and I can make this happen. And finally, I told him, I said, you can have the 10 days. You need to get moved. And also, he's going to have the $3,000 cash that he needs to move into Kermit's house. So this was the T-bar. This is extremely important, the most important document I use as I do my deals. And I've been using T-bars probably right at 20 years now. So I've got a lot of experience with these things. Okay. Larissa?
Yep. Next slide.
Yeah, please.
Go ahead.
And if anybody has any questions, they're free to ask me questions. They don't have to just sit and listen to me yap, 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 yap. I'll be happy to take any questions as they come up.
And I haven't seen any yet, Bill, but I will let you know.
Okay, so here's the structure I came up with to do this deal. First of all, just explain what a teeter-totter offer is. 2 seats on a teeter-totter. And so I'll let the seller take one, but I get the other. So in this case, he wanted $11,400. That was very important to him. So I said, okay, you get that. But I get terms. In other words, this would be an owner-financed home. So I get to determine how I'm going to pay him his $11,400. And I also knew he needed the $3,000 to get into his house. And so the way I did this was, okay, I'll give you $3,000 cash, and I'll give you a note of $8,400, 0 interest, 84 monthly payments of $100 per month. So what he gets from me is a promissory note and $3,000 cash. And the thing is, I did not have the $3,000. This is where your IRA comes in. This is a small dollar IRA deal, but it was not my IRA that was going to do this. It was going to be my friend's IRA that had the knowledge of how to do Lonnie deals. Okay, next. Okay, so I went to Dyches Boddiford. You saw his picture before, and again, he's been my longtime teacher. And what I said is, if you will look over my shoulder, if you will make sure that I don't do anything wrong, I'll give you half the deal. And in us talking, he agreed to put up the $3,000 that I needed to give to the seller of the mobile home. And in return, I agreed to split this deal with him 50-50. And the $3,000, by the way, it came from his IRA. So this was an IRA investment for Dyches. It was not an IRA investment for him, but I just want you to see how a small dollar deal works. So what I gave Dyches was something called a participation note. So what he got was half of the profits from this deal for as long as we own this property. And by the way, that was done in 2008, and we still own this mobile home today. So one of the things I found out with mobile homes is the mobile homes are not mobile. They stay in place. But the people are very mobile, and about every year to 3 years they move, and then someone else moves in, and we sell the home again and again and again. So Dyches, when he agreed to this deal, I agreed to give him the first money out to get his $3,000 back. So after a short period of time, he had no more money in this deal. And we did sell it with owner financing. I think we were bringing in like $375 a month. So $100 went to the owner of the home, that I bought it from. So that was his $100 payment. That left us with 275, and Dykes and I split the 275. But in the beginning, Dykes got the full 275 until his 3,000 was paid off, and then we began splitting everything 50-50. And to date, through 2020, Dykes has made over $20,000 on this little bitty deal, and that is a great return on his investment. So I want you to see that even with $3,000 in your IRA, you can still do a deal. In this case, Dykes brought the three, but he also brought the knowledge. So that's something important to remember. Okay, Larissa. The next smaller dollar deal I want you to see is something called a pure option. And I have done a ton of these over the years, and this is the main way that I invest today. Because Kim and I live in a motorhome and travel around the country, I'm not able to lend the way I used to. So instead, I buy options on property. So it's not a lease option, it's strictly a pure option, meaning I get the right to buy the property at some point in the future. So I want to show you how that works. And again, this is another small dollar deal, and this did come from my IRA. So in this case, the owner of the property, this goes back to March of this year, and he had for the last 2 or 3 years rented boats on a place called Lake Altoona in my county, in Cherokee, in Bartow County. And he had decided, his kids were like 10 and 11 years old, and he decided to go buy a boat, a ski boat, but it was to be his, so he could use it a lot more, and it would have a nice engine and go fast and not be some a rental thing that's been used real hard and put away wet. So he was set to go buy this boat in March of this year. Then, as you know, the virus hit, and one of the things that happened to him is he got laid off. He had been with one of the carpet mills for 25 years. He was in management, but he got laid off. So he didn't think too much of it because he had the house that you just saw, and he had good equity in the house. And he went to go to the banker to get a $15,000 loan or $20,000 loan to get a boat, whatever it was. And the banker said, because you're not working, I can't make you the loan, and nor could anybody else. And so he was stuck. And he said, this is really too bad, because if you think about it, right now with the virus, I can take my kids out every day on the river. We can have great fun this summer because I'm not able to work right now, but I can't get the boat. And he didn't want to put all the money down the drain renting little bitty boats at this little marina that weren't a lot of fun. So the banker had him call me. I went out to see him. So we're again at the kitchen table. So this is what I found out. This is the left-hand side, the current position, that he wants to own a boat. And the reason why is he wants to build family memories while his kids are still young enough. And he thought a boat was a great way to do that. But now that the virus hit and he couldn't buy a boat, he felt like a year was going to pass, at least a year was going to pass before he could get the boat. And he was kind of upset by that. And he had gone to the different banks, and they all said, because you don't have a job, we can't loan you the money. And again, we talked about him renting a boat. They're not in great shape, and they're not very fast, and they're not ski boats. And he said, if I could just, find some way to get this. Now, remember, his home has a lot of equity, but it's his personal residence. So I can't loan against that personal residence because of Dodd-Frank. So the way I do this is something called a pure option. Okay, Larissa. Oh, wait. Before you do that, I want you to see the right-hand side. So he told me his problems. I'm sitting at this kitchen table, and as I'm doing it, I'm putting arrows over to the right-hand side. And I'm thinking to myself, with the offer I put together, he just has to say yes. And look, he'll be able to get the boat, and he'll be able to build those memories. And, he's going to be living the dream that he wants, and it will not be in the form of a loan. So he doesn't incur debt, and he doesn't incur payments, which is safer for him. And he doesn't worry about renting a piece of crap boat that he doesn't want. And he'll be in his boat within the week, starting to build those family memories. He just needs to accept my offer. And again, remember, sometimes the why is more important than how much. And people always ask, why did so-and-so take the deal that you gave them? Because it helped them solve their problem. It was their why. Okay, Larissa. So here was my offer to the homeowner when we were talking. And you would make him an offer a loan and secure it to his house because of Dodd-Frank. I knew the home was worth $225,000 as it sat. I think he owed probably about 160, maybe 150 on it, as I recall. But anyway, the home was worth 225. And I told him that if he gave me the right to buy his house sometime in the next 10 years for the 225 he said the house was worth, that I would give him a boat, a ski boat that he would love using. And so he goes, well, tell me how this works. I said, it's easy. I said, I just want to have the ability to buy your house. So you're going to be giving up some of the appreciation starting today on your house, but in return, you'll have a boat before 10 days is up, and you start building family memories this year, not wait for next year or the year after. And I said, with this, if I turn out and I don't ever I don't ever buy your house, then you don't owe me anything. It just goes away. However, in talking to him, I said, if I do buy your house for the 225, then whatever profit, one day I'll buy it, I may keep it as a rental, but one day I'm going to sell it. And when I do, whatever the profit is above the $225,000, we'll split 75-25, you getting 75% of the upside and me getting 25% of the upside. So he was going to get most of the upside. So this set well with him. He liked everything about it. He was going to give up some future profit if there was profit. I was gonna buy his house if I bought his house, but no matter what, there was no debt. He wasn't gonna make any payments, and he liked this a lot. Okay, Larissa. So that was the deal we agreed to, and immediately when I left his house, I went finding a boat. Now you got to know that I'm a door knocker, so I had to go find a nice ski boat, and I just left his house and went looking, and it took me about an hour and a half to find it. Larissa, does this sound familiar to you at all?
It sounds very familiar.
So anyway, I was about 3 subdivisions away, and I was going through a subdivision, and this is what I came across. Now, first of all, what got because I was looking for a boat, there sat a ski boat in the driveway, and I went, a ski boat. Next thing I saw was the for sale sign. They're wanting to get rid of their house. The next thing I saw was sale pending, which means their house was due to go to closing. So no matter what, I was going to make an offer to buy this house, which is what I do. So that was great. So I stopped, I knocked on the door, talked to the nice lady. She came outside and we talked. And it turns out that they were probably within about 10 days, 2 weeks of closing. And on the boat, their kids were grown. They were now in high school and they didn't go on the boat anymore. And so to her, they didn't use it for the past 2 years. They had winterized it, but not used it. It just sat in the driveway, taking up room and blocking the garage. So she wanted the boat gone before they moved. They already had their next house lined up. This house was due to close in 2 weeks, and she wanted the boat gone. So in talking to her, I thought, maybe we can work something out. Next slide. And so as I talked to her, what I found out was she said the boat as it sat was worth $15,000, but truly, and from her frame of mind, she just wanted the boat gone. She said, how quickly can you make this boat get out of here? And I said, if I can make it go away really, really fast, what would you take? And she said, I'll take $3,000. She said, just make this thing go away because we're going to have to move this boat and it's going to sit in front of the next house we live in. So I want it to go away. And so she agreed to sell me the boat for $3,000. I went and got the guy that I was going to get an option on his house. By the way, I made her a written offer on her house too, but it closed for her, so that was good. So she got her house closed and moved. But anyway, I went back to the guy I talked to a few hours earlier. I took him back and let him see the ski boat. He loved it. It was what he was looking for. It was designed for skiing, more than enough room for his family of 4, and he was all about it. And so he agreed that if I gave him that ski boat, he would give me an option to buy his house. Okay, next slide. So here are the numbers on this deal. So first of all, he gave me a 10-year pure option. A pure option meaning a lease was not involved. This was just me buying an option so I could buy his house some point in the future. And I secured my option using a deed of trust. So if you're in a deed of trust state, You can use a deed of trust. And again, there's a lot to learn on doing pure options, but this is just kind of a rough overview. But you use a deed of trust to secure it, or a mortgage if you're in a mortgage state, because a deed of trust and a mortgage secure promises. And that's how I make sure that my option is in the chain of title. So if they go to sell it or to go get a loan or whatever they're going to go do, that my option shows up and I get a phone call first. So if the house appreciates 3% per year over the next 10 years, that house will be worth $303,000 10 years from now. And that means there would be $93,600 in equity that would have built up in this property. And if we split that 75-25, he would make $70,000 and I would make $23,000. So my $3,000 coming from my self-directed IRA would earn a yield of 20.7%, and we're talking just $3,000. Again, the point of the meeting today is, don't worry if you don't have a lot of money in your account. You can still go out and make deals happen. So on the last one, I helped put someone else's IRA to work. In this deal, I used a pure option to put my IRA to work. So this is now going to be the last one. And what this is where I'm using $100 from one of my accounts. In this case, is an HSA account. And I'm going to make a 2,000 and some odd percent return on my money. You heard me right, a 2,000 and some odd yearly yield on my $100 investment. So again, it's just knowing people, it's finding people to help and problems to solve. So what this deal was a friend of mine named Ned was needing to get a loan on a commercial building. And the commercial building, they sold nuts and bolts and things like that, hardware, to the carpet mills in the industry. So they couldn't get these supplies at Home Depot or Lowe's. This was specialty items. It was a 10,000 square foot warehouse. So he's trying to buy the buildings, the land, and all the inventory that came with it. Next slide.
And Bill, before we go on too much into the next deal, we did have a question for clarification on what you used your IRA for. And I think that the answer is that you bought the boat, which then secured the option, but maybe you could just clarify.
Yeah, the money bought the boat. The boat was used as collateral. In other words, when you went to get an option, when I got the option from him, you can use cash. So I could use the $3,000 to get to get the option, but he didn't want $3,000 cash. We tell people all the time, that it's not money they want. What he wanted was a boat. So I bought a $15,000 boat for the $3,000. So my $3,000 bought the boat, and I gave that boat as what the owner of the property required in order to give me an option to buy the property.
Yeah, actually, and somebody's asking us just to go back a little bit to the slide there. So if you look here, you'll see, I don't see the 3,000 listed on here, but here it is. So the 3,000 to buy the boat, and then the boat, which was actually worth 15,000, went to the owner of the property who wanted the boat. And so the 3,000 originally came from the IRA, which is what really the option consideration was for.
Yeah, and go forward one slide. I want you to see one other thing. So if you look at the third bullet, I want you to see what the strike price was on his house. When my strike price that we agreed to was not $225,000. I gave him a boat that we both agreed was worth $15,000. It didn't matter that I paid $3,000. So my strike price was the $225,000 that he said his house is worth, minus the $15,000 boat, even though I have $3,000 into the deal. And so my strike price is $210,000.
Okay, great. That's great clarification. That actually popped up in a question. Another question is, how is the boat titled or deeded?
I deeded the boat directly to him. So all that happened was I had money wired to the owner of the boat. Actually, it was a checkbook thing. So I just handed her a check for the $3,000, and it was the boat. And then I traded the boat to the owner in order to get the option.
Okay, perfect. And a couple of questions popped up. What happens if the owner doesn't want to sell at the end of the time frame?
Understand, I have an option to buy. So Think of it this way, and it's secured to the property. What happens if someone goes to a bank and borrows $100,000, and at the end of the loan they decide they don't want to pay the $100,000 back? What does the bank do? They foreclose. The house is the collateral for the option. So that's not what I want to do. So really the way it works is at the end of the loan, the bank would call the note due. If the borrower still doesn't pay the loan, then the bank will start foreclosure procedures. And it's the same thing here. So I have the option, and I would call the option due to say, hey, I'm ready to exercise my option. If he goes, I just don't want to sell you the house now, then I can go to a foreclosure and take the house that way, which I've never had to do, by the way.
Okay. I think that was good clarification. Thanks, Bill.
Okay, next slide. Okay, so with Ned, he needed $250,000 to buy this building. And I told him, I do not make loans on commercial buildings. I don't understand them. I'm not a commercial guy. I am a single family house guy. So I was not his guy. However, when I pulled into the parking lot and I saw a sign on the side of the building, immediately when he walked up to my car, I said, we're doing the deal. So a lot of times I will do a deal for the story, not because of the money. In this case, the money was great, but that's just kind of what goes through my head. So anyway, the numbers behind this one was the fair market value of this property was $400,000, and that was without the inventory. Ned was buying it for $350,000, so there's a little equity there. Plus, there's another $150,000 in inventory. And Ned was putting down $100,000. So that meant he needed a loan of $250,000 on this property, and there was so much collateral there, I felt real comfortable that if he backed out, that we went from making good money to making great money. Okay, next slide. So here I am doing the T-bar with Ned, and Ned wants to buy a commercial building, and he needs the 250, and he needs to close quickly. He didn't want this deal to get away. So again, I say to myself, if all he has to do is say yes to the offer I put together, and he can buy his building, he's going to get it for the 250, and I can see that he closes in 10 days. So he's going to get everything he wants. He just has to say yes to my offer. Next slide. This is the sign that I saw on the side of the building. House of a Million Screws. And immediately I thought of my friend Dyches Boddiford. Remember the guy I did the mobile home deal with? Well, I wanted a deal called the House of a Million Screws. So he would have to use that phrase with me every time we talked about this deal. And I just thought this would be grand fun. So when I saw this sign, I looked at Ned and said, we're doing the deal. I don't care what we have to do. There's enough collateral here. We're doing this deal. So now let me show you, because remember, all I had in the account was $300. I'm trying to make a loan of $250,000, and in my HSA, I have $300. So I've got to make this deal happen. Next slide. So first of all, I asked Ned what terms would he agree to if I could make the loan happen, and he said that he would borrow the $250. He was willing to pay 10% interest plus 2 points. It'd be a 20-year amortization, and there would be a 5-year balloon built into the loan. And all I had to do is, I looked and said, well, we can do those terms for you, Ned. So Ned got the terms he wanted. So this deal kept moving forward. But remember, I have $300 to my name. Keep going. So here's the structure. Here's how this deal was put together. First of all, the loan was going to be for $250,000, and I didn't have $249,900 of it, so I had $100 to make this deal happen. So what I did was I had 2 loans created, both 2 different lenders lent to Ned, and then I wrapped those 2 loans with a 3rd loan. So let me explain the first mortgage. Again, this is Dyches Boddiford. So I went to Dyches and brought him into the deal. He happened to have $220,000 in one of his self-directed IRAs. So that's what was in that account. He goes, well, let's do 220. So I put him in first position. He agreed to accept 9% interest, 20-year AM, 5-year balloon, and he would get monthly payments of $19.89 per month. Then I went to another friend of mine, and his name was Glenn Samuels, and he put up 29.9, and he was going to be in second position, but he was happy getting 8% interest, 20-year amortization, 5-year balloon, and he'd get monthly payments of 251.25. And finally, a third mortgage was created for 250. So that made it complete, but within the bounds of the third mortgage, it included the 29.9 mortgage and the $220,000 mortgage. And so on the third mortgage, I got 10% interest, 2 points, a 20-year amortization, 5-year balloon, and monthly payments of $2,426. So my $100, my third mortgage, was making whatever was left over. And that meant the yearly yield on this investment, on this self-directed account, was 2,226% per year. I think that's pretty good on a $100 investment. But remember, in this account, it's not like I had $90,000 in there. All I had was $300 in this HSA account, so I used a third of it to make this deal happen. Okay, Larissa? And we're back to my contact information. You're going to have questions, and there's my phone number, and I'll be happy to answer any questions you have.
So I'm just looking, and I didn't see any new questions pop up. Oh, I have one. Bill, back to the deal with the boat. We have an attendee that wants to know what happens if the house value drops below 200.
I lose the bet. I'm out. You know, see, I don't have to buy the house for the $210,000 anytime in the next 10 years. And in fact, he wanted to make sure he could stay there and get his kids out of high school. So it was a 10-year option that I got, but I couldn't exercise it for the first 8 years. But if the value drops to $100, I can't exercise it. I'm just out the money. But I count on doing good deals, good homes, good neighborhoods that's going to have appreciation. But I didn't see the virus coming, and a lot of us are the same way. You hope that things just go well, and that's one of the things I do with my pure options.
And I'm going to give you just a second to write down Bill's contact information. Also, everybody, and I think I did forget to mention this, the slides are attached, so you can actually download them while you're on the webinar. So you can download them, and then you'll be able to have Bill's contact information. You should see them there as a handout for you. I want to encourage everybody to get any last minute questions typed in. And while you're doing that, I'm just going to give you some information on some networking events. So a lot of times after a webinar like this, we'll get asked, okay, well, where do we find these deals? How do you do it? Well, Bill mentioned one way that he does it, of course, is door knocking. So, and he travels the country and teaches door knocking. So if Bill is going to be in your area after his cross-country bike ride, then I would encourage you to go to his door knocking class. It's fantastic. I have done it. And he's taken me door knocking a couple of different times, and it is an amazing way to find deals. But another way to do it is also to do networking. So make sure that you're in touch with the investors in your area. And a couple of different times, Bill mentioned that he brought in a seasoned investor to help him put the deal together. And I think that's really important when you're new to maybe not investing, but even the deal structure that you're working on. And so where do you find those seasoned investors? Definitely check out networking in your area. Of course, it was a little easier at one time where we could, just look on Meetup and go to something local. But now, of course, they're all on Zoom. And so you can take advantage of that and join a Zoom meeting and get to know people outside of the meeting as well. And just along those lines, we have our own Zoom networking meeting that we do every other Friday. It's 12 o'clock Eastern time. And I would encourage you guys to join us. It's a haves and wants style meeting where you have the opportunity to talk about deals that you're looking for or deals that you are looking for partners on or whatever it might be. Everybody has the opportunity to speak, introduce themselves, give out their contact information. And it's usually about 12 to 1:30. The next one is November 20th. So we're just continuing right through the holidays with our every other week schedule for now. And you can find information on www.advantaira.com/events. And again, that is November 20th. And the other thing that I wanted to mention, of course, is our all of our opportunities for learning about self-directed IRAs. There are always no cost, no obligation, and we have a lot of great events coming up, and we have a lot of deadlines for IRAs coming up as well. So if you guys are interested, go ahead and check out our calendar, join us for webinars, and you can always go to YouTube and search Advanta IRA so that you can view our recorded webinars. And this, of course, will be recorded and shared with all of you on the call today and anybody that registered. I did have another question pop up, Bill. It says, let's say that you sell the option or exercise the option. Will that be a gain in the IRA for the difference in the
Yes.
option from inception?
Yes. The gain goes into the IRA. The IRA owns the option. I don't own the option. The IRA does.
Yep, and that's a great way to look at it. I always tell people you want to look at your retirement account sort of like your business partner. So if your business partner put up the money, then it's your business partner's deal, and that's very important when it comes to self-directed IRAs. Remember that slide I showed right before we brought Bill on, where I talked about something important is the IRA pays the expenses and receives all of the income, and that's very important. So in this case, the expense, of course, purchasing the boat, trading the boat for an option, and then in the end, either selling the option or exercising the option for whatever the gain might be. I think that was it. So I'm going to put my contact information up here again. If I missed your question, I apologize. Reach out to me directly, or again, of course, you can reach out to Bill. Download the handout and let us know if we can answer any of your questions. And I want to thank everybody for joining us. And thank you so much, Bill, for not only joining us from your trek across the country, but also making an effort to ride back or forward a couple of miles to get better reception so that we can have you on.
Anything for you, Larissa. Anything for you.
Thanks, Phil. Thank you, everybody. And the recording will go out in just a day or so. So if you want to go back and listen to it, review it, or share it with friends, you'll have the opportunity to do so. Thanks, Phil.
Okay. Bye. Yeah,
Bye bye.
everybody be good.
Thanks. Bye.